Hello, good afternoon. Can you hear me? Thank you. I don't know the reason I can't hear you still, as you know, last week. But we'll start our lesson. We'll do a bit recap, what we learned during our last lesson, and then we'll start. So please, if you have any question you can ask, we can go through first a bit recap. I don't know the reason either. Your mic is muted, it seems, Okay, no worries. That's fine. As long as you can hear me, it's absolutely fine. But please, if you have any question, you can chat in the chat box. Okay, so what I'll do, I'll share with you the booklet. Just 1 minute, and that's which will be it's good to use. And just 1 second. Share. Today is our topic is about internal control, which is LO2, learning outcome 2, and which I'll share with you, and we'll go through accordingly. Just 1 minute. So I'm sharing with you Kaplan Resource Bank, which normally we use for AAT audit and assurance. And that's quite good to use as well for the just sake of developing understanding. These are the booklet and the pocket cards, small cards if you want to print all the terminology, so you can use. So you will see the cards. So I shared with you in the chat box. So if you click those, you can download them if you want to, and good to use them. Okay, welcome. So we'll start. Okay, so today lesson, which is about, thanks for joining. And today lesson will go through LO2, which is about understand the nature and the importance of internal control. Before that, we'll do a bit recap. We last lesson we learned about assurance. We discuss about assurance engagement. We discuss about those parties involved. We discuss about principal. Actually, the shareholders are the owner of the company. Director are the agent, and we discuss about agency relationship. We discuss about assurance details. Never give the absolute assurance. They can give the positive or negative assurance based on the facts and figures. And we said, the assurance is very important. And we had a discussion about the financial statement, and we discussed about some standards as well. And we had a discussion, a detailed job to be give the true and fair information. And we link 5 professional code of ethics. So today we'll go through our second LO, which is learning outcome 2. We'll start. So always good to be any activities we'll do. Good to be reflect how much I know already about internal control and assurance. Scale 1 to 10. You can reflect yourself and you carry on reflecting at the end, which is always good practice. Okay, so today lesson indicative content component of internal control for both computerized and manual system, consideration for control environment, preventive and defective control and internal audit, The word audit is derived from the Latin word data, which is mean checking the accuracy in the book of account. The audit purpose is checking the accuracy in the book of account. Some today we'll go through the risk, audit risk. Risk is mean the probability or the chance of happening. If the things are not in control, it can increase the risk. So risk is, it can be positive and negative in a financial world. Risk not always negative, but we need to be look around the probability, how much we can bear it or how much the chance of happening. Okay, so when we say inherent risk, some businesses are inherent risk. If you're doing the cash business, of course, it's a huge inherent risk itself. But if you're doing through your payrolls and everything is through computerized and you transfer the thing is easy, the risk will be less. So risk, control risk, if you have not clear control, segregation of duties, if one person doing everything, there is a highly likely risk. If many people are segregation, the person issue the invoice is a different person, the person making the payment is a different person, or the person issues the stock is a different person. So it can be, the risk can be controlled. So control risk will be low. Yes, because there is a proper control system. Okay, deductions are how we can deduct, can be their risk if the sample size is very little or we don't have evidence, so it's very difficult to deduct the risk. Yes, if the paperwork so that can be in audit, we can look around inherent risk, risk of control or deduction risk. These all known as the audit risk. Overall, legal responsibility and liability. So it's a legal responsibility because actually in a PLC, public limited corporation, PLC, public limited or public limited organization, it's a public money. We have to work. It's our responsibility as a safeguard. So work in the best interest of the shareholders. So maximize the worth of the shareholder. That's actually the owner of the business. Okay, so normally the word liability means legal obligation. The word liability means legal obligation. By law, we have to fulfill. So we'll go through method of minimizing risk, how we can minimize risk. Yes, there will go through the different approaches are there. One is called THARA or SARA. So we can, THARA is stand for transfer the risk. If you're getting the insurance, like you can transfer the risk, you can accept the risk, up to, of course, any business we do is a risk there. We can respond to the risk. And if we don't do the business, we can avoid the risk. Yes, transfer, acceptance, response, or avoid. So exactly the same is abbreviation. We can share risk. Yes, we can avoid risk. We can respond risk. Yes, or we can accept risk. So these are just the two words really we carry on using, which will go through. Audit engagement. So if we have the client engagement, so letter of engagement, which we can and look around, that's clear role and responsibility within the help to reduce the risk. Exercising the professional judgment. So if you have a good industry experience and you do the audit, and you can give the assurance based on your professional judgment. Yes, and your judgment can be systematical. Okay, so today we have these assessment criteria 2.1, identify the command verb, discuss and describe, yes, of internal control environment. Then 2.4, explain the internal control, evaluate the conclusion which we can draw on, and we look around internal control, mitigate risk, how we can. So these are our assessment criteria, which is under learning outcome 2, which is when we do the assignment will be assessed. Okay. Internal control. So what is about? So internal control is the process designed, implement, and maintained by those charged with the governance. So when we say corporate governance, it means how the company will run and control. So every company, they publish the corporate governance, or we call CG. So it's very crucial in any organization. We have clear segregation of duty and all the stakeholders representation. Stakeholders representation. So stake mean interest. Those are interested party. They like in school, parent governor. It can be. It's good to be. Yes, we listen the parent voices, not just the school itself. And others personnel to provide the reasonable assurance achievement of entity objective. Objective mean end result. Any activity we do, we set the objective. And at the end, what really, why are we doing audit and what is the purpose of it? Reliability of the financial reporting we want, effectiveness and efficiency of operation really we want. Our operation is a streamline and compliance with the applicable laws and regulations. Like NI contribution, we have to do look around HMRC record, look around the background reference check, like what is your selection and process of the staff in our organization. So details goes all the areas in and give the views about, and then they can draw their own, the final reports. So component of internal control, control environment, risk assessment process, information system, control activities, and monitoring control. Okay, so when we're looking the relevant control, not all the control relevant to audit risk, but the auditor's primary concern, those are the part of the management risk and maybe material misstatement. What is a material misstatement means? So when we say materiality, we had a concept is called materiality. Materiality means significance. We can look around how significant, like Tesco, their turnover was 180 million, but they showed 280 million, 220 million. So it's a 40 million more. So this is a material thing. If 10 pound transaction miss, that's not a material. So materiality look in reality. Yes, the transaction, how can influence on the decision making. So that's which we can look around. Any question if you have, please, you can ask. So then we have a ISA, which is called International Standard of Assurance 315, which state that details need to be understand the entity's internal control, because then you can do the audit properly. To assist this process, identify 5 components. Control environment, we can look around the process, information system, control activity. At the moment I said Tesco. Yes, their turnover, their figure was 180 million sales. Actually, they showed 220 million turnover. So this is just because it's a role model Tesco. It's still that not been fully decided. Those will be charged. Those involved. The management, the government. Okay. So we can look around monitor. The control environment includes the governance and the management function. So like if we have executive and non-executive members in the board, that help Yes, so we can look around. You have a different 2 tiers, 3 tiers board. So especially in the Theresa May government and government emphasis on the employees representation, union representation. not just, whatever executive will do. Their voices should be heard. So that's, which we can look around communication and enforcement, integrity, honesty, ethical values, morally correct, commitment, competence. Yes, we can look around corporate governance, management philosophies, operating style, organization structures. Yes, so all this leads to the internally control, which help, the organization, policies and procedures, which we can do audit as well. So when we say control environment, attitudes, awareness, okay, I can share with you the slide if you want. You want me to share with you slide? Okay, no problem. I can in the chat box. So sorry, it takes 1 minute. So yes, so I shared with you all the LOs, yes. So which we will go through. So today as well, for that week. Okay, so we can look around the attitude, awareness, communication, enforcement, commitment, management philosophies, organization structure, assignment, authorities, responsibility. Yes, reporting properly, operating properly, and keeping in law, the risk assessment. So if we not approving, like, if we do like bank reconciliation after 1 year, if we do every month, every quarter, so that's, the properly we can. If you do weekly, monthly, quarterly, yearly, yes, that's a good reporting system. Wherever we have the gaps, so we can adjust it. We can look around the keeping in law. So by law, we need to be published the financial statement once a year after every 12 months. We have to look around in the law. We can look around in the morally and ethically correct. Information system, infrastructure, physical, software, people, procedures, data, all is related to financial reporting. Initiative, record, process, and report of transactions. Yes, so we have, the good control in place. Control activities, we can do policies and procedure, performance review, information processing, physical control of assets. Like nobody is stealing the asset of the companies. Segregation of duties, yes, segregation. So is very crucial, which we'll go through in a minute, few words. Monitoring control. So we have checking, audit, internal audit, check, the control are appropriate or not. Just because, if it's the new IT system or new AI or digital tools we are using, how effectively those are controlled. Because otherwise anyone can hack the system. Yes, IT perspective as well. So we can perform these and the details can check. Okay, it's a statutory requirement. It's by law, we have to maintain the company by law to keep accounting record, disclose reasonable accuracy of the affairs. Auditor assess the system, allow the director to carry it out deeply. Walkthrough testing, auditor tracing one or more transactions. So we can say, come on, oh, show me this supplier invoices. When you order things, what basis, where does the purchase order came from, which department, who raised it. Yes, when the good receive in the warehouse, we can check it. And then we can, what is your process? So we looking the process and what control we have. The invoices in a 3 copies. Yes. Who is responsible? It's not one person. So always is good to be, that can be a test. Control risk, when the system is walked through, the editors can make assessment control risk. Is it the control is appropriate, or if there is a lack of control, there is a control risk. So those we can look around these. That's quite crucial, which we need to be. Test of controls we can perform when the risk assessment includes the expectation, operating effectiveness, control, and substantive procedures, which we'll go through in a minute. Test of control, inquiries, observation, inspections, examination, reperformance, or we can say inventory first. What is your revaluation of the inventory? Like window 98, what is the process is absolute asset? Yes, all we can, auditors can go through these activities to check, the system is reflecting the assets value or the things appropriately. As well, test of the control, operating specific control application. So we can look around if the risk is shown, the control is ineffective, inefficient, there is a high risk. Yes, because on the basis of this, there is a no consistency or lack of consistency. Editors can observe these and can look around. Okay, then we can revenue system objective. So link back to the risk, we can look around ordering and granting credit. So we can say, come on, how you grant the credit to the clients. So you check the references, you check, background check, you do the credit check. Yes, what limit what are the procedures? Like if you want to give the 20,000 credit or 100,000 credit, so what is the process? Is it the same? Is it the same person? Is it the same person? Is the same person is the responsible for everything or not? So dispatch invoicing, yes, correct, and the goods supply as we discussed. Recording, accounting, and the credit control. So we do purchase ledger and purchase ledger control, PLCA, which is mean creditors. And we look around purchase ledger, which is being individual. Yes, and their name, their addresses, their invoice. So it should be reconciled. How often we reconcile? So that's in real world we do. In the same way, sale ledger control account, which is mean your debtors, and we do LC sale ledgers, which is mean individual account. So like how much money we supposed to receive from our debtors, but which person we have to receive, what are the discounts if you're giving buy now and 10 days you pay, you will get prompt payment discount and things. What are the control process for these? All we can look around these in the control. Okay, internal control, when we're looking segregation of duties, authorization of terms, we can look around the correct prices score, yes, match orders, dealing with the customer. So all these is quite a detailed, give the views, reference authorization, credit term and matching. If we have errors, these we can rectify. So internal control, it can be dispatching invoices if we are dispatching things. Examine the goods dispatch quality. If it's a return, what is the process? So these are all the sequence which we look around. Arithmetical accuracy. Yes, what we have, we batch off our return. So those are the processes we can look around. Segregation of duty, recording the sales and the statement, recording the sequence of the sale invoices, the matching the cash receipt and the cash book, and those be when we receiving it. Like if we normally we use the double entry word dead and click. So what is these means? E is a debit, expense is a debit, and asset is a debit, and drawing is a debit, when those increase. Yes, when those increase, we do debit. What we do credit when increase. So we do liability credit, we do income credit, we do capital credit. Capital credit, yes, when these increase. But when you withdraw it something for personal use, your capital need to be decreased. Yes, so we do the debit and credit rule based on the debt click. So if your sale ledger control account is reduce your receivable, what effect on your cash book? So when you're receiving the cash, so cash is an asset. So your cash went up because you received the money, but the receivable also asset. So receivable went down. So you're replacing one asset with other asset. So purchase ledger control is the liability. So if you bought the things, so purchases is a debit and the purchase ledger control is a credit. So you can check it, through the double entries, what effect you have, other books are reflecting accordingly. Because of course nowadays is a software, you're just entering the nominal codes there, it do automatically. But as a manual accounting, we can look around, we can say print these and the editors can check them. Okay, so we can look around the accuracy, remittance, and various others. So these are all just example. We can look around one full process. Okay, so purchase control. So if you're looking purchase control system for audit, so you look around the auditing, you look around the receipt, and you look around the accounting, the payments. All the process you need to be look around in an audit process, and look around the segregation of duties in the control. Is it the same person doing everything? Yes, you look around the monitoring, you look around pre-numbers. It's not mean the document, anyone can use the form or buy the form and use it. No, it's need to be think about the control. Like even the petty cash book, you need to be think about. Not anyone withdraw the money from the petty cash, and we have to look around, which is quite crucial for the control. Okay, internal control, like goods inward, goods received against the notes. Yes, we can look around the reference supplier invoices, check the supplier invoices in math, prices and the quantity like per unit, and the return goods if we have, procedure to place obtaining credit note. If we have returned the goods, what you getting credit note? Yes, because if you make the payment, maybe the future you can use the credit note. So all these we can look around the test of controls, and that's quite crucial, which we need to be look around. These are all the steps we can look around. So depends, you can pick it anything, you can do audit. Like you want to do the cash system audit of control, what is the control of the cash book? Is it anyone can withdraw the cash? What is the process we paying? Okay, even paying the wages control. So look around the timesheet, look around the salaries, look around the clock in, look around the HMRC, look around the NI contribution, look around the, yes, and link to the cash book, because the cash is went out, how much is being went out when the salary was accurate and being audited. Yes, so segregation of duties, safeguard, stems, dates, all we can look around in different test of control. So we need a good test of controls. Twice is the liability of internal control system that should be transparent. It can be like a couple of the company being caught fake invoices. Okay, internal control like banks, bank reconciliation we can do. Yes, daily banking, bank receipt, restriction of opening new bank account. It's not mean we have 20 banks account. Limitation of the cash, we can look around the surprise, yes, cash count, surprise cash, yes, custody of the cash and the check, restriction on the issues blank check, yes, bank reconciliation. So how often you do payments, yes, Check, yes. We can spot a document, authorize signatures from dispatch and the signed check, payment record from and the cash payments authorized. All these we need to be, and we perform the test of control, or we observe the cash count. The details kept asking, because if we are doing audit of inventory control, inventory means stock. So you can maybe look around which method of inventory evaluation you using, first in first out, you using FCO, are you using, of course we can use for management, but we're not using in finance, is last in first out method. Yes. So all the inventory movement and their opening closing value according to whichever. It's not mean you use different methods. You should be consistent whichever you use, because otherwise the closing inventory value can be safeguard. Yes, the theft of the inventory, the damage of the inventory, the revaluation, absolute of the inventories. What is the process? How often you do and check the stock taking. Actually, the inventory is showing in the system. You have in the warehouse as well, not it's showing in the system. Segregation of duties, goods inward, like inbound and outbound. Inbound means the things are coming in, and outbound means the things we are selling. Yes, so that's like inbound warehouse and outbound warehouse can be big companies. Inventory issue, inventory record, and the test of control. We can identify the discrepancies which we need to be. Protection, again the theft, again, yes, the revaluation, deteriorations held by third party who own it. So valuation appropriate, calculation check, condition inventory review, accounting for the waste is provided. Inventory holding provisions made. So what is the provisions? IES2, which is about inventory evaluation. Inventory should be recorded at cost or net realizable value, whichever is lower. Yes, you don't show the inventory in the high. So that's been done according to IS, not. If not, then can be a question mark. Your control system is not appropriate. So check sample, yes, check the sequence, observe, and consider the environment is maybe not appropriate. Okay, payroll. Okay, so we can look around, as we said earlier, implies only paid authorized amount of the work done. Deduction were appropriate. The correct implies being paid. Their NI and the implies is still working in the organization is being informed. Segregation of duty, authorization, recording any charges, custody of the cash and the payout, maintain the salaries bank account, reconciliation of the payroll account, and recording the payroll and reconciliation and deduction. So test of control we can do. So depends how you pay, but of course is a crucial. We do the reconciliation, even you pay the cash, but of course cash is not a good system, is it? So that is the risk of control can be itself. Okay, if you're looking non-current asset registered for the control, which is all the non-current asset like property, plant, equipment, we have a separate register. You can look around addition in the non-current asset register. You can look around the revaluation of the asset you have. You look around the depreciation of the asset. You look around the disposal of the asset, and is the non-current asset register being updated accordingly or not. And think about your depreciation policy. Maybe no depreciation in the year of sale, and the full year depreciation in the year of purchase. That can be your policy. So it's matched with against the policy, your depreciation. Are you using the depreciation straight line? Are you using the depreciation diminishing balance method? You are consistent with those or not? Internal control, authorization for the purchasing, non-current asset registered, asset inspected regularly, budgeting for the purchase and sale, depreciation related authorized or review. So these are the test of control. We can look around reconciliations and all, and we can inspect assets. You showing we have a van. Show us where your van. We can check it DVLA record is the logbook on which, yes, it's not showing on, is in matching it, because we can do an audit prospect. Okay, so please, we use ACA maps, the word, to test the controls. So first A is authorization. Who authorized it? The person was liable to authorize it, like expenses claim of purchases or the cash transfer. Computer control. So what is the computer control? How often we do the password and the virus, or you have the software in place? Comparison, comparing budget, actual and the variance. What you budgeted figures, what are your actual? So we can say it's start and the end. Why the difference? Why the variance? Arithmetical, we can calculate the hours. We can say give us one base slip, one timesheet, and we can recalculate with the clock in and with this, yeah, overall. So we can see the arithmetical. Maintain and review control, sale purchase control, yes, and the bank. So that's, we can look around what is the accuracy there. So we said ACCA and map. So map is mean maintain there, and when we'll say A is the account reconciliation. You're doing all the purchase ledger, sale ledger as mentioned, PLCA and SLCA with the individual ledger. Physical control. So do we have a CCTV? Do we have a mechanism in place in the organization? Asset is being well controlled. Segregation of duties. Always good to be the word we are carry on using, segregation. Not one person is responsible for everything. That's good to be look around. Okay. Then assurance engagement, which we said in the previous lesson, account and express, and give the opinion. Reasonable assurance is a high level of assurance. Limited assurance, which is low level, which we had a discussion, is also linked with the second, but here we're looking internal control perspective. Inherent in limitation of audit, yes, the judgment, directives. Some business are inherently risky. Their fluctuation is a lot. Yes, you have to look around the evidence. Okay, so the objective of the editors to identify the risk, as we said, material, like look around, understand what industries, regulations, watchdog, we are compliant with the compliance rule or not. Think about the industry, think about internal control are appropriate or not. Okay, so this is very important topic really we use is risk. Audit risk that a detailed state in the financial statement are fairly present when they are not. So is audit risk because you saying thing without looking it. Like we said, Enron. Yes, Anderson, the company in the previous lesson, we had the discussion. So when we say risk of material statements, it can be two risks. Inherent risk, the risk the item will be materially misstatement due to the nature and the context. Inherent. So then we can look around control risk, the risk entity internal system will not prevent it, detect it, and correct it. Like in schools and various other institutions. So if they are getting DBS are all checked, so that can be because the control is appropriate, that's no risk there. Yes. So you're detecting at the beginning instead of late. Deduction risk, the risk that auditors will not deduct as a material misstatement that exists in the financial. So because that auditors failures to, like, sometime Ofsted inspector not pick the thing. Yes, because the audit wasn't, or the sample wasn't. Okay, so that can be a risk itself. So audit risk overall, audit risk leads to risk of material misstatement and deduction risk. If we have these, this leads to audit risk. Any question? We okay? Then we can look around that details no control on the inherent and the control risk affected by the entity. A detailed plenary, they give the assessment, including the expectation of the control and operating effectively controlled test should undertake. Assessing the risk. Advocacy accounting system, which we can say is being reconciled things. Yes, is your double entry. We can match it. We can get third party evidence, identify the type of the potential misstatement, can consider the factor that affect the risk mismaterial or misstatement, and design appropriate audit procedure. So test of control, substantial procedures, test of detail, we can look around analytical. So those we can further will look in detail. So the objective of the details, of course, the material misstatement we earlier mentioned. We look the risk, sorry, we went backward. Materiality. What we said, materiality means significance. So a detail should highlight the materiality effect. Help, what and how many items being tested. Whether the sampling technique was at the level of misstatement leading to modified. If there was so much, material misstatement, a detailed opinion can change on it from reasonable to the limited assurance. Yes, that's a huge risk. So items may be material due to the relative size, the natures, and their effect. So some high value items, maybe low value items are the companies which we're not looking a lot, but some companies have the multi-millions contract. So these should be reassessed during the auditing to the change the risk assessment. Yes, so we have to audit risk is all about the risk assessment. Significant risk is specific audit consideration. Fraud risk is the management is being incentivized, if there is an opportunity or there is a rationalization for the fraud. Rational, yes. So we can look around the related parties, the transaction. A detail must discuss any suspected fraud. Like we have a leases, IFRS 16 is being recently released. Not now recent, it's a good 3 years now. Okay, so IFRS 16 about leases. In the past, companies not used to be show the operating lease. Yes, so operating lease mean like a rent, and they're not showing at how long you have a commitment to pay the payments, because they just carry on making the payment as expense in the book of account. But if you're a customer or investor, you can't see it how long the obligation you have. No, they're saying, come on, you have to record the asset, but you record the liability against it. So we can say when you carry on making the payments, so we can reducing your liability. Yes, and we should reflect it, because that's is not true and fair, because the financial statement need to be true and fair. So that wasn't fully compliant. So these being, so we can look around, evaluate relevant control, carry out extra procedures, document findings, reports of management, third party, your internal control. If you have it, you do internal audit, which is good. That helps, because external audit is not going to pick every bit and piece. They just do the observations, they do the tests. So you can look around in the lineup, the new laws, new things, new legislation, how quickly you pick them and you modify your system. Okay, so I included few bit and pieces here, links. And other than that, I shared with you the uh, those cards as well, quite good. Internal control, you can pick any. Yes, so that's which we can further look in our LO3 as well. Any question today? No. Okay, thanks for attending. Have a good weekend, and we'll go through next lesson, our LO3. Thank you. Have a good weekend.